We just opened the meeting right now. We already have 100 plus connected. Okay, I still believe this is a really trending topic. I mean, you never get over with corporate tax.
Never. It's the hot topic.
Okay, we're over 120 now already. Do you want to get started? We'll just give it 5 more minutes because we just opened the link. So let's give it 5 more minutes.
All right.
Or just 1 more minute. Let's go. So, good morning from Dubai.
Morning. Morning, everyone.
I have with me Zishan Tour, who's the General Manager of Creditzone's Tax and Accounting, and Mohammed Al Said, who's the Head of Tax at Creditozone Corporate Tax and Accounting. Zishan, would you want to introduce a bit more about who you are, what your background is? So, I mean, we know at least they know who they're addressing the questions to.
Sure. So I've been in this industry for quite some time, about around 10 years. I've joined Creditozone in 2018 and have been with them with Creditozone Tax and Accounting for the last 5+ years. So we've been through that, we've been through corporate tax, and it's been a very good experience and growth that we've had in the tax regime as well for the UAE as well.
It's been progressive, right? Like
Exactly.
every year something new was implemented. And this was all of a new concept again, because always we used to say UAE is, the tax haven,
Yes.
but not anymore. But yeah, I'm sure it has its own pros and cons to it.
Absolutely. The tax rates that we have in the UAE are one of the cheapest ones in the world, in the region, in the world. And even going beyond that, the authorities have made it very easy for people to be compliant.
Right.
And they've allowed multiple reliefs, multiple options, how they could benefit from things.
I'm sure,
especially with corporate tax, and we'll discuss more about that.
Absolutely. That's why we are here for. And Mohammed, why don't you introduce yourself?
I'm the head of tax at Creditozone Tax and Accounting. I have joined Creditozone Tax and Accounting since 2018. Started my journey here with tax in the UAE in 2017 with the preparation of the introduction of the VAT. And I'm accredited tax agent with the Federal Tax Authority. We have been assisting our clients since then for the VAT, excise tax, all the compliance and tax requirements, and has been quite a journey now with a lot of developments happening in terms of the tax environment in the UAE. This is all new to the businesses here and business owners.
Absolutely.
Yeah.
I'm sure, because every day we get questions about, am I applicable for registering for tax? How can I get the relief? Is my business should I even register? So there are tons of questions surrounding corporate tax every day. I have a list of questions myself to be addressed. Meanwhile, if you have any questions, we're here to answer your questions, basically. So if you have any concerns, just drop the question in the chat box or the Q&A session, and we'll pick it up as we progress. Okay, so who wants to start? We'll go by the basics again, because I'm sure there are a lot of new attendees in this webinar. So let's take it from phase 1. So what is corporate tax? When was it released? What's the rate? Yeah, let's start with the basics.
Okay, let me just start with the basics, and then I'll give it to the tax man to get things, more into complex. So corporate tax has been introduced in the UAE, and it's been effective from 1st June onwards. It's at 9% on your tax, on your taxable profits above 375,000, and up to 375,000, it's at 0%. So generally, it's 9%. There are multiple reliefs available to free zone entities, to small businesses, and all of these things. So the 3 things that I would like to, make a note of for everyone is: 1, every company is required to register for corporate tax. That's a mandatory thing. Whether you qualify for any reliefs, whether you have to pay any tax, it's 0, whatever it is, you have to register, regardless of whether you're free zone or mainland or whatever it is. That's one thing. Maintaining books is another mandatory requirement that everyone has to do. There is no option in this. You have to maintain books at all times. And then the third thing is filing the returns. Even if you qualify for a relief, you are going to pay zero tax or whatever it is, you still have to file a return at the end of the year. After there is a time period where you have to file a return.
So that's regardless of the amount you produce. I mean, even if it's zero revenue.
Even if it's 200,000, that's below the threshold, you still have to file a return, because that is how you're letting the authorities know that you're doing exempt. Only this much. Right. So that these three things are mandatory for everyone, whether you're small business, whether you're big, whether you're free zone, whether you're mainland, whether you're one person business, whether you're multiple owners, these things have to be done.
Okay. Got it.
Now I'll hand it over to Mohammed to go into more complexity.
In depth.
Yeah.
In simple terms, yes.
In simple terms, so there have been in overall the world, there are developments in the terms of the fair tax that it's been introduced in the whole world to cover all the jurisdictions. Now there have been a lot of pressure from the OECD to have no jurisdictions that have no tax or a minimal tax rate, because this affects as well the other jurisdictions and affects the concept of fair taxation. So the UAE has introduced the corporate tax end of last year. We have received also the law. We have experienced it all over this year, a lot of cabinet decisions, ministerial decisions, clarifying a lot of points in the law. There are also some reliefs that are available in the law and exemptions. Still, the tax regime introduced in the UAE is very competitive compared to the whole world. There are also some incentives and reliefs for small businesses to help businesses to grow and not to be affected by the tax and the tax administrations. We will go through this in during our session.
There was this question of if a person's company is registered in a free zone entity and it doesn't have any business or any bank account opened yet. So how do we go about this one?
So whether a bank account is opened or not, that does not impact whether you need to register or not.
Okay.
A bank account is a means of receiving payment.
Okay.
But corporate tax is still a regulatory thing that you need to adhere to or comply with. So you still have to, as soon as your company is open, you still need to register, you still need to maintain books, you still need to file a return, even if it's at 0%.
Okay.
These things still have to be done.
Okay, so Serge, that is your answer. Again, the corporate tax is at 9%, right? So how do we calculate? Is it the amount beyond 375,000 dirhams, or how is it calculated?
So the corporate tax is based on the net income of the company. So the first 375,000 dirhams are taxed at 0%, while net profits or taxable profits above this amount will be taxed at 9%, given that you are under the normal corporate tax regime and you are not a qualifying free zone.
Okay. And is it mandatory for every company to register, right?
Yeah. So the concept is that every juridical person, which is a company established in the UAE, is a resident person, which is taxable person by nature as per the corporate tax law. So as long as you have a trade license, a company, you are a taxable person. So you need to register for corporate tax.
So that's regardless of if your business is registered in the mainland, the free zone, anywhere.
Correct. It's regardless of your incorporation status, where you are incorporated, and as well regardless of the income or revenue. Even if you don't make any activity, you don't generate any income, you must register for corporate tax.
Okay.
Whether you are going to pay corporate tax or not, this will be based on your activity at the end of the year when you are closing your financial statements and submit your tax return. Based on the net profit reported as per the accounting standards, then you will pay tax or not. But as long as you are a resident company in the UAE, you have trade license, you must register for corporate tax if you are not eligible for any exemption or relief.
Okay, we'll come to the exemptions in a bit. Also, is corporate tax applicable on individuals?
So individuals earning salaries or investment income, this is not taxable. However, individuals that are conducting business or business activities, they still fall under the corporate tax law. However, there is a relief that is available for individuals with the revenue annually 1 million dirham. So if you are individual, you make only 1 million dirham or below, then you can benefit from this relief, and you wouldn't be required to register for corporate tax or pay corporate tax. You wouldn't need at all to register. This is one of the exemptions that we talk about for individuals.
Okay. All right, we're getting quite a few questions already, so let's jump to a few questions initially, and then we'll take it forward from there. Question is a free zone FCE establishment deemed to be in the same bracket as an FC LLE?
Okay, so when we look at the type of the company or the legal structure of the companies, are the sole establishments and sole proprietorships. This does not have a separate legal identity from the owner. It's considered as an extension of the owner himself. Therefore, it's treated as the individual, as the natural person himself. Because if you look into their articles or memorandum of association, you would see that the liability of the sole establishment or sole proprietorship does not limit to the company. It goes and extends to the person himself.
Okay.
This is unlike the LLCs, the limited liability companies. So let's say you own a company, it's an LLC, limited liability. Yourself has a separate identity from the company itself. So the LLC, if it has liabilities or anything, it's limited to the share capital. Therefore, it has a separate legal identity from you, and it's taxable.
Okay.
Taxable separately from yourself.
All right.
Yeah. So to summarize this, sole establishments are considered as individuals. Sole establishments, sole proprietorships, they are considered as individuals. They can qualify for the 1 million relief.
Okay, got it. Also, there was a question. I mean, could you please repeat if it was 375K net profit or net income?
This is the taxable net profit.
Net profit. Okay. Where do we register, and what is the last date for the registration for an LLC company?
So there's no deadline for registration as of now. What has been announced is you have to register to file the return. So there is a deadline for the return, which is 9 months after your financial year, and similar. So apparently the registration deadline is also the deadline for the return. Where you register is on the Emarat tax portal. You have to make a profile if you don't already have one, and then there's a section for you to create your registration or apply for registration for corporate tax. You will have a separate registration for VAT, and a separate registration for corporate tax.
Okay, so there were a few questions on how to register, so I believe this answers most of those questions. Because on FTA portal, you'll have a corporate tax base just like that. Is that how it is?
Yes.
Okay, got it. Okay, and is there any last date? Nothing, no, nothing is
not for registrations
announced as of yet, right? Okay, so if a company has a VAT account, I mean, or doesn't have a VAT account, does it still have to register for corporate tax? It's two separate things, right? Completely?
Yes.
Okay.
Yes, regardless of whether you have a VAT account or not, these are two separate taxes. They are maintained separately, they're adhered to separately, they're complied with separately.
Okay. So for small businesses, what are the best ways to keep books, ideally without much investment? Also, how does one register for corporate tax even when the company does not qualify?
So
two questions.
One, let me answer the easy one.
Yes.
Whether you qualify for the corporate tax, like we said, whether you by that, if you mean qualify for the qualified free zone relief or the small business relief, regardless of qualifying for any of those or not, you still have to register for corporate tax. That's a very simple thing that we need to make sure that everyone understands this. Corporate tax registration is compulsory regardless of earning income, doing any activity, where you are established, free zone, mainland, what's the level, whether you qualify for any reliefs, registration has to be done. All the reliefs are only going to be applied for when you file the returns. That's how those reliefs are going to be applied for and adhered to. Now, the second part of the question was how?
Yes, how?
So it's, like I said, it's through the returns, how there will be options of whether you qualify, and more information will be required for each of these things. So for example, for small business relief, the threshold is 3 million. If your revenue for a year is 3 million or less, then you qualify for it. and there will be an option on the return to be able to, opt in and do all of that, and then you can submit that return. That's how you qualify for that.
And how do these businesses know when when does their financial year fall and when do they submit for corporate tax?
Okay, in most of the jurisdictions, the financial year is mentioned in the memorandum of association or articles of association.
Okay.
In absence of that, it would be the financial year that business is followed to close his accounting statements. If this is not defined up to today, the business can issue a board resolution defining the financial year.
Okay, so otherwise it's default.
It's usually in the memorandum of association and or articles of association.
Okay, perfect. And about these qualifying incomes or qualifying, can you elaborate on that a bit? Because we're asking, would consultancy services be qualifying activity, or do we have a list of those qualifying activities?
Yes, correct. So to shed a bit of light on this topic for the free zone. So for a free zone person to be able to benefit from the 0% corporate tax, the relief, there are certain conditions that must be met. First thing is that the qualifying free zone person must maintain adequate substance in the free zone and generate qualifying income, comply with the transfer pricing regulations and arm's length principle, and as well does not elect to be within the normal corporate tax regime, as well prepare audited financial statements. These are the basic requirements for a free zone company to benefit from to be a qualifying free zone.
Okay.
If we go a little bit in detail, so for example, what would be maintaining adequate substance? This would be, for example, that you have an adequate number of employees to help you generate the income from your activity, adequate assets that you use to generate the income, adequate amount of operating expenses that you spend in the free zone. This can prove that you have adequate substance in the free zone.
Okay.
A qualifying income, we will go now to the qualifying income. So qualifying income is income generated from the qualifying activities. There is a ministerial decision that was issued regarding the qualifying activities.
So we have a list already.
We have a list of the qualifying activities, for example.
And where can we find that?
This is available on the Ministry of Finance website.
Okay.
Yeah. Some of these activities is like manufacturing and processing of goods and materials, headquarters, operating ships and aircrafts. There are some list of activities like that. If you do one of them, this is a qualifying activity that any income generated from this is a qualifying income.
Okay.
One other condition as well for the free zone that some of the cases like the company will be doing some of the activities are qualifying activities and some are not. So they need to meet the de minimis prescribed in the regulations, which is 5%, the lower of 5% or 5 million dirham of their activity of their income is generated from the non-qualifying activities.
Okay.
So if let's say you make 10% of your activity non-qualifying, this will disqualify you totally from benefiting from the qualifying free zone regime.
Okay, that sounds a bit complicated.
Yeah,
yes, it is.
More in simpler terms.
How you get this benefit of the qualifying free zones is a little bit complicated.
Okay.
There is, as you said, there is a list of qualifying activities, there's a list of excluded activities, and then there are further conditions that you have to make sure that you adhere to be able to qualify for this. One of these conditions is, like you said, the de minimis criteria, audited financials, maintaining substance, all of this. So if you want to qualify or if you can qualify, it depends on whether you comply with all of these 6 conditions. If you do, only then you can avail the relief, the 0% relief. If you do not meet any one of those, you will not be a qualified free zone anymore. And then you will be a standard, a normal company who will be filing returns as a normal company.
So you have to provide proof for all these 6 stages so that you can, make yourself exempt from the tax.
Correct. So documentation supporting all of this would be required. As we know here in the UAE, the tax system is a assessment systems where you submit your return based on that you satisfy the conditions.
Okay.
The tax authority is the responsible body for the administration of the tax. Therefore, they have audit teams where they would check or request additional information from you to prove that you, for example, met the adequate substance, that you generate income from a qualifying activities. So a documentation will be required for all to prove all conditions are met.
Is there any other small business relief that you can highlight?
Yes. So as mentioned a little bit about it earlier, the small business relief is available to companies free zone or mainland.
Okay.
Whoever has a revenue of 3 million or less, they can avail this relief. But this relief is only available for the next 3 years until 2026.
Okay.
One thing that I have to mention is anyone who is availing a qualified free zone relief is not going to be able to avail this relief.
So
it has to be either or.
Okay.
Yeah. And this small business relief is very simple.
So once I avail for small business relief, now after 2026, I can't go and apply for qualified free zone or whatever
I think
incentive
there is an option of that, but it will depend on further clarifications. If they restrict that or not, that's something
so
that
as of today, okay,
yeah.
you can't right now. Okay. All right. Again, when it comes to the audit requirements, what is the revenue threshold to be kept in mind when deciding if businesses can get their financial statements audited?
So the audit requirement that the businesses are required to maintain audited financial statements in 2 cases. The first case, if their annual revenue is more than 50 million dirhams,
okay,
or they are qualifying free zone regardless of the revenue. Let's say you are benefiting from qualifying free zone regime and your annual revenue is 100K. Still, you need to have the audited financial statements. There is no threshold for the qualifying free zone. The threshold is for companies that are under the normal tax regime.
Okay. Again, we said the tax is based on net profit.
Correct.
Okay. Now, coming to these deductible expenses. Okay. Now, if I want to show my net profit less, I can increase the salaries of people or add in more entertainment expenses. Is that something that we could do to minimize our, the taxable amount?
So first, salaries to connected persons or any transactions related party must comply with the market prices of this. So there would be measures from the tax authority, and we would expect a clarification on this.
Okay.
Would be a way to measure the salaries, because it's understandable as well from the authority. You are the owner of the company, you are executive director, you can put the whole revenue as a salary and you pay nothing. So this is understandable from the authority point of view, and this would have measures, because salaries would need to be at arm's length, would need to be in line with the market value of the salary in your position and in a company in your size. This is regarding the salaries. Regarding the entertainment expenses are capped at 50% only. So
okay, there's a cap for that.
Yeah, if you spend 100,000 dirhams in a year as entertainment, you can only deduct 50% of this.
Okay, so there are rules and regulations coming with this. Okay. Questions, back to questions. There's so many questions coming in. An FTZ engaged in the business of procuring merchandise from one country and export into another country directly without bringing the goods physically into the UAE, will the profits of that entity be taxable or exempt?
Okay, so I would suggest if you have any specific questions related to your business, you can reach out to us directly. Our team would be happy to assist in any specific advices. But generally, if you do one of the qualifying activities only, you can benefit from the 0% of the free zone.
So there's no trading within the UAE. That's what he said.
Still, if the company is resident in the UAE, it will be taxable in the UAE, but we would need to look into more details of the transaction so we can advise you to the best.
Just one thing on it. Maybe this is a confusion because of VAT. In VAT, people doing a similar kind of work, buying from one country and shipping it directly to another, that was out of scope. So that's why there is this confusion.
Okay.
But for corporate tax, as you
It's
said,
not.
it's a totally separate thing.
Okay.
It's something that every resident company has to, register for.
Okay. You mentioned filing needs to be done 9 months after end of the financial year. Kindly clarify the financial year, and you said it's on the articles of association.
Yeah, so the financial year should be in the articles or memorandum of association. In absence of that, you would use the financial year that you used to close the accounting records. And if not, you can pass a board resolution to clarify your financial year. Let's say your financial year is January to December, your first taxable year, Jan to December 24. The filing of the tax return would be within 9 months, which would be before the end of September 25.
Okay. There was a question, does Creative Zone provide accounting service? If yes, is it only limited to your own clients? Definitely not. We're open. It's just not our clients. We have a whole team working here under Creative Zone Tax and Accounting who's ready to take anybody, any questions. And I see many of these questions are very specific to their specific businesses. So I would recommend, as Mohammed said, just email these questions to us, and we would be more than happy to respond to them on this, because it's very specific. So we don't want to get into details of each business. Again, going back to, there's quite a few recent updates that's come up, right, on corporate tax. Can you just highlight a few?
Well, one of the most recent ones is about tax procedures and how you use the financial standards to maintain your books. As per the regulations, you have to use the IFRS to maintain your books. And for small businesses, there are going to be a lot of small businesses. There is IFRS for small businesses. And you use that to maintain your books. That's one of the things. The other thing was the administrative penalties. And maybe Mohammed can shed more light on that.
Yeah, so there was a ministerial decision issued in related to the administrative penalties. Same like the VAT, there are penalties when you are in violation with the tax regulations. There would be penalties. Examples of this submission of voluntary disclosure to correct something in your VAT return, late deregistration, and non-keeping the accounting records. All these have penalties. There is a list of the penalties that are applicable under the corporate tax regulations. One of the other updates as well was from the Federal Tax Authority in relation to the change of the tax period. So in certain conditions, you can apply to the tax authority to change your tax period. If you want, for example, to align it with the other group members to be able to join a tax group.
Yeah,
so,
exactly. That was something that we wanted to touch upon. Yeah.
Yeah, this is something that you can apply to the tax authority, and this only can be used upon approval from the authority. You cannot change the tax period by yourself and follow it. You must get approval from the authority, then you can use the new tax period.
Okay. So I have one specific question. This person has been writing in different channels. So just one specific one. Okay, we're importing goods from Germany and we are charged by customs for clearance, duty at 5%. This is our first year business in Dubai. I would like to ask if we have to add the 5% to our invoices. If not, how we can get back the charge which was already done by customs. We are not yet able to apply on that.
Okay, so if you mean the customs duty is something that's separate from the tax law at all.
So this is completely different from corporate tax, right?
Different. Yeah. You can incorporate that in your costs or in your pricing. This is something that's up to you and up to your business. But to claim back customs duty is not something that is available.
Okay. What about free zone companies? The 9% applicable? Yes, right? If any free zone, mainland, everything, corporate tax of 9% is applicable.
Correct.
Okay. All right. For an e-commerce company as a free zone who sell B2C outside the country, it's still applicable, 9%.
We are saying yes, still applicable,
Okay.
but I would suggest as well to look into these detailed questions because there are many other factors that we need to
Define.
look into so we can advise according to the law.
There's so many. I'm just scrolling through the questions. So as a small business, what kind of financial records do I need to keep and submit?
Yeah, so businesses should maintain the accounting records as per the IFRS. So this is as a symbol or as a start, you need to have a profit and loss statement. You need to have balance sheet, records of salaries and wages, records of the assets. These are the basic requirements in terms of the financials that you need to maintain. Also, other reports or other financials might be requested by the tax authority.
Okay, and a person is asking, Zoho books, is it sufficient for to use for maintaining books, as all of our businesses is on Zoho books for 4 years now? Is it sufficient enough?
Yeah. So the tax law does not define how or where you maintain the accounting records, whether you want to maintain it on accounting software, on Excel sheet, on papers. There's no specific guidelines where you can maintain the accounting records. You can maintain it in a way that whenever the tax authority would request it, it's accessible. This is the most important rule, that the accounting records are accessible by the tax authority
Whenever requested
for. But personally, or as per our company, we would suggest you to have it on accounting software. Zoho is one of the
Zoho books is a good one, right?
It's one of the good accounting softwares that is approved by the tax authority. The reason we suggest the accounting software is that as per the tax law, you are required to keep the accounting records for 5 years.
Okay.
So this would help you to maintain proper track of your records, to keep your invoices and all the statements on the accounting software.
Okay. Again, coming back to the deductible expenses, does the half annual bonus pay to C-level managers, who are shareholders, count as expenses under the salary and wages category? The bonus is usually less than the value of 2 months' salary and is paid every 6 months. So bonuses, commissions, all this, is it part of the deductible income?
So if this is a contractual agreement with the director or the person, the employee, it could be deductible. However, still you need to look if this is in line with the market. And first you need to check if this person is considered as connected person or he is a separate person from the company. Let's say he's an employee. The conditions when it's an employee, it's different from you are a shareholder in the company and you are assigning a bonus or salary for yourself, because this would go under the connected persons and you need to keep it in line with the market price.
And what about commissions for employees? That's again deductible, right?
Commission for employees can be deductible. Yes.
All right. So the financial report, is it required to come from an auditor or can we do it in-house?
So the financial statements can be done in-house if you are accountant using any accounting firm. There is no mandatory requirement unless you are required to keep the audited financial statements if you have 50 million revenue or you are a qualifying free zone person.
Okay, all right. And for the purposes of establishing the taxable net profit, will retained earnings be taken into account or only the net profits earned during the reporting financial year?
So when you look at this, you would look at the net income generated during the year.
During the year, okay. Yeah. So what do they mean by retained earnings? It's something that was generated before?
Yes, correct.
Okay. All right. A foreign company have a branch in Dubai free zone or DED is applicable under corporate tax. Is that correct?
So branch by definition is an extension of a foreign entity or the parent entity basically. So if it is resident here, if it is conducting activities here and it does not pay taxes anywhere else, then it will be applicable under corporate tax.
Okay.
If it is paying taxes elsewhere as part of the parent company, then there are those exemptions allowed.
Okay. So again, we'll have to have a proper statement proving all this.
Yes.
Okay. And is gratuity deductible?
So gratuity, I believe it would be deductible because it's a business expense.
Okay.
All the business expenses which are purely for the business will be expend deductible, basically.
There's no last date of registration announced as of today, right?
No.
No. And what are the other updates? I mean, there were penalties that you were talking about. I mean, is there like a amount that is put forward? Like if you haven't done this, X amount is going to be the fines or anything to elaborate on that?
There are a list of these amounts which have been announced. Going through that all list will be too much. Can we touch on some of the major ones?
For example, failure the taxable person to submit amendment in case of any change in the business, this is 1,000. In case of repetition, it's 5,000. There are others as well. For example, for voluntary disclosure, it's 15% of the mistake or the amount difference in the tax liability. So there is a list of specific penalties for specific violations of the tax law, which is available on the tax authority portal.
Okay. I have a question here. Can a foreign company established in the UK open a company in Dubai and benefit from the tax related advantages? Would any potential income or transactions between our UK and Dubai entity need to be declared as management fee, or are there any other methods?
Okay, so the foreign company setting up a branch in the UAE, this would form a permanent establishment in the UAE, which would be taxable in the UAE. So this is something that we would need to.
But the tax rates in the UK is much higher than what we have here, right? So
yes, correct. That's correct. And in these cases, we would need to look into the double tax agreements between the UK and the UAE.
All right.
There are double taxation agreements between the countries, and it's different from one to another. So we can look into details of the double tax agreement and how it would affect the situation. But generally, yes, it would be a permanent establishment in the UAE and would be tax-free.
How expensive would it be to keep books of account for a small business as per law?
Regarding
just a rough figure, if you have it on top of your head.
Yeah, we don't have a rough figure for that.
It depends on
the scope
business,
of
exactly.
the business.
So I mean, see, all these questions, maybe you can have like a one-on-one consultation with them, so that at least they would know exactly what you need and advise based on that.
Yeah, but absolutely. If we give a quote that will not be relevant to your case, that will not help you. What we do, and we specialize in giving you quotes which are specific to your business, which are taking into consideration how many transactions you do, what type of business you have. All of these things are taken into consideration to give you a quote that's reasonable and customized to you.
Yeah, exactly. Because every business is different. Your transaction is different from mine. So definitely,
and people's definition of small is also different.
Yes.
My definition of small might be,
mine is very small.
So exactly.
Yeah. So I know they've seen like companies from MNCs to small businesses. So again, yeah, I mean, what you think as defining as small would definitely may not be small at the end of the day. You never know. So it's always best to get advice from people who know, so they could best advise you how to proceed. And also when people set up businesses, I mean, is this something that you give advice to them? So I plan to open a business. Now I'm unsure if I should open a business in the mainland or free zone. So can I work around so that my tax can be minimized? I mean, is there any guidance that can be given at this point of stage before even starting a business?
Yes, what we can do is we can assess what your business plans are. We can have a discussion before you finalize your contract, and we can help you make sure you create a structure where it is tax efficient. That's what we want to do for any company that is being set up. We give them options on different ways on how to do things, and the things that are possible for their structure, we give them better options on how to minimize their tax.
Right, because we're primarily a business setup consultancy. So we get a lot of these questions when clients come to us. So how can I mitigate or minimize my tax if this is my business model? So definitely, if you can come to us, we'll definitely do a background check or research, and then probably advise which free zone or what is the best approach to set up your business, right?
Yeah,
okay,
absolutely.
Perfect. So we still have a lot of questions very specific to the specific companies. I'm just going through, I'm sorry, I'm just using through comments at the same time talking, so that's why. Please touch upon related party transactions treatment, especially relating to transfer pricing.
Okay, so that's one very complex topic.
Okay.
And this transfer pricing concept comes in when you have more than one entity in a group, related companies. And the concept that is being put in place right now is the OECD rules for transfer pricing are going to be looked at when we're discussing transfer pricing in relation to UAE.
Okay.
Right, so they have certain rules that you have to adhere to. You have to make sure you're compliant with the obligations that the authorities have put in place. And yes, as a basic line, these need to be adhered to when you're looking at related party transactions. Any transactions between companies in a group, they have to make sure they're adhering to those.
So is that something to do with the group taxation policy?
That plus whenever you have a transaction between a group, it has to be at arm's length. It has to be at market value. It cannot be favorable to the group to minimize their tax impact. So there can be one company who can be charging a high amount of a certain product than the market just to minimize their tax impact. So that is why these transfer pricing rules are in place, to avoid that. And all these transactions have to be at market value, have to be at arm's length.
Okay, Mohammed, you want to add something?
Yeah, to shed some light on this. So the transfer pricing rules came from the concept from the OECD to introduce the fair taxation concept, where before there were companies that were using the related companies to shift profits. So you can shift profits from a high rate tax jurisdictions to a low or no tax jurisdiction in any other country. So this was being used to advantage for the groups, especially the multinational groups that were setting up companies in low or no tax jurisdictions to be able to move profit, to shift the profits. And this was being used to profit shifting and avoidance of tax. The transfer pricing rules applies where you have any transactions with related parties or connected persons. One of the examples, for example, you own a company in the UAE and another company in the UK. So you might want to shift some profits from the UK to the UAE, as the UAE is a lower tax jurisdiction. So transfer pricing are in place for these transactions to make sure that the transactions are being done at arm's length. One of the examples, for example, is the interest. When a company is giving a loan to another related party, they might use a different rate for the interest in order to be able to shift some of the profits, because this interest at the end of the day will be interest income for the company that is in a low tax jurisdiction, and will be deductible expense for the company that is in the other higher tax jurisdictions. So this is the concept of the transfer pricing. There are methods that are being used as per the guidelines from the OECD and as per the action plans of the OECD, that there are specific methods that to be used to reach to the transfer pricing, or to be reaching to the arm's length price. Examples of this is the CAP method, the profit margin method. There are many methods. There are 5 methods that can be used in different situations to reach to the arm's length price.
Okay, so that is a huge topic in itself.
That itself is a big topic and has a lot of details.
Okay, all right. Again, are investment profits taxable? So if I am, as an individual, I have profits coming from my investments. So is that taxable? I mean, if it's over the threshold again.
So as an individual,
I don't have
as an individual,
no,
because it's your investment. So as an individual, salaries, investments and real estate, they're not taxable. They're in your personal name, as long as it's legally also in your personal name. They're not taxable. But if it's done in a capacity of a company, then it is taxable.
It is taxable. Okay. All right. So can you highlight how corporate tax? Can you highlight how corporate tax applies to free-zone freelance consultancy company? Again, this is one more confused topic. Again, I'm a freelancer. Am I applicable to corporate tax? and okay, a free zone entity. So I'm sure there's a lot of confusion in this area.
So-
It's like a gray area for
Yeah.
all of us.
Yeah.
Not
So-
for you, I know. Yeah.
So the thing is that you have to look at the type of permit or license that you have acquired to
Mhm.
conduct these activities.
Like
If it's a
let's say
freelancer permit-
a videographer, photographer, how does that?
Even in that case, if it's a freelance permit that is usually considered as a sole establishment, or like Mohammed said earlier, it's basically considered as an extension of that individual. So
Okay.
if it's a permit, if it's a sole establishment, it's a sole proprietor, then that's considered as an individual.
Right.
Then the same 1 million threshold is or exemption is still available.
Mhm.
But if it's a LLC type of a license, then it's considered as a business,
Okay.
and then you have to register as soon as you can.
Will all free zones be considered qualified, or are there specific designated zones for qualified free zones like what?
So the free zones are
All.
considered as qualifying free zones if you meet the conditions, and as well you can double check that with your free zone.
Mhm.
Regarding the designated zones, there are specific scenarios for the designated zones where you do wholesale of goods from the
Okay.
designated zone to a domestic or outside. And there is a public consultation that was issued for this, and we will wait for feedback from Ministry of Finance on this. But generally, if you do wholesale of products from a designated zone,
Mhm.
yes, you can qualify as a qualifying
Qualified.
free zone.
Okay, all right. Commissions to employees are exempted. Yes, you said.
Deductible, yes.
Yeah. So, okay, a request, would it be possible to conduct a separate webinar only for free zone companies?
I think the last one we did was mostly
Maybe.
related to free zone, but sure, absolutely, we can do that again.
Absolutely. I mean, this is the kind of.
This is a very
feedback-
hot topic,
Yeah,
so-
I know, because there's a lot of confusion revolving around this whole free zone, because every day we get inquiries saying, is my business applicable? I'm with this free zone, that free zone, and there are 55 different free zones here, jurisdictions. So I'm sure there's a lot of questions just revolving around this topic. So definitely next webinar will be very specific to free zone companies, right? Zishan and Mohammed have given their word.
Sure.
All right.
But on this topic, whether you are a free zone company or not, again, I want to reiterate,
Yes.
because we get these questions a lot. Do I need to register? I'm a free zone. Why do I need to register? All of this, regardless of being a free zone, you still have to register. This has to be said multiple times so that, it's.
So there's no workaround, to be honest. I know we all want to hear what we want to hear. So basically, unless and until somebody tells you, okay, you don't have to file for corporate tax, we'll keep asking. That's basic human nature, I would say.
Yeah, I
Because
agree.
you want to hear what you want to hear, what you like to hear. But
Absolutely. So yes, but one thing I want everyone to take away from, especially the people who have companies in free zone, is they have to register. The only difference with them and mainland companies would be they're eligible to the relief, the qualified free zone relief, if they meet certain conditions. Then there will be 0% tax, but still all the other compliance requirements, registration,
will
bookkeeping,
have to be.
and return, they still have to be done.
Okay. Even if that's why I mean, if I have a company, there's 0 transactions, but still you have to maintain.
Exactly.
Okay.
These 3 things are
Have to-
standard for everyone: registration, bookkeeping, and return.
Okay, perfect. And there's no exemption for mainland companies, you're saying, or is there any really sort of relief?
The same small business relief is
Okay.
available for mainland companies.
All right. So yeah, we are kind of close to concluding. Do you have any, final thoughts that you would like to share before we get, I mean, we'll see if more questions come in. I mean, there are a lot which I didn't attend to, but again, it's very specific to your specific businesses. Do write. I'm sure the team has already shared our email addresses on the chat. So feel free to contact us directly and we'll be able to address all these questions. Closing words, Mohammed.
Okay, so to conclude, our advice would be for businesses now. Most of the businesses here have financial year Jan to December. Not all, but most of the businesses. So the time from now up to Jan, up before you start your first tax period, you should start to look at your company structure. Make sure that you have enough resources that you would need to be able to comply with the regulations. Look at your financial statements, how you maintain your accounting records. what policies you might need to be able to comply with tax regulations. Look at the registration if you haven't done so. And also, we would suggest to have an assessment done so you would be able to know how the corporate tax can impact your business. If there is any of the reliefs that you might be able to benefit from, and what conditions you need to meet to benefit from the relief, if there is any exemption. So up to Jan, I would suggest to look into this, to start planning your tax strategy from now before you start your financial
And we
year.
all have the habit of leaving it to the last minute, and then it'll be a chaos complete, right? So it's always wise to start early, see where your business falls, and then take the necessary precautions, I would say.
Of course, it's always wise to be prepared, especially when it comes to the corporate tax. Unlike the VAT, corporate tax requires planning, requires structuring. So it's not simple as the VAT. You would need to seek advice from experts if you don't have the expertise in-house. You would need to look at the best structure for your business. If you have any expanding plans and all of that, it's the best to have tax planning in place.
Right, perfect.
I want to add one thing to this as well. For the companies which are being created now after 1st June, please make sure you understand that this period is also taxable for you. Not just, it doesn't just start from Jan 24. Any company which has been established from 1st June onwards is taxable for this time period.
Okay.
It will get counted towards your first financial year, but they're still taxable for this time period. Please don't ignore this time period.
Okay.
That's one thing. The second thing that I would want to say to conclude this is, if you're confused at all regarding anything about corporate tax, please get expert help. Whether it's in-house, whether it's outsourced, whoever it is, get help from the right people, qualified people who can help you, put you in the right direction. Do not be misguided by anything, that's not professional.
You hear a lot of stuff, but we don't know which is right.
Exactly. And that's why it's very important to get clarity, especially if you're confused about things, whether you don't know whether you need to register. Although we have said this multiple times during this webinar as well, registration, bookkeeping, returns are necessary for everyone. But if you're still confused how this is applicable, why this is applicable, we're here to help you. If you need our help, we're always here.
I have one more question. Okay, we spoke about mainland free zones. Now I have a question just came in. What about offshore companies? Now, if the business is registered with RAF ICC or any offshore jurisdiction, does it, tax is implied for them?
So this depends on their activity, whether it's a holding company or as far as we know that the offshore companies would be usually not conducting any activities. Usually they are just holding shares or not. So this would follow the regulations regarding the holding of assets or holding of shares in other companies. So you would need as well to look at the registration and look at how the tax will impact them.
Okay, perfect. Raghav was asking, would a one-on-one tax consultation be possible? Absolutely, yes. These gentlemen are here. They have a huge team behind them. So we'll always be here to answer any of your questions. I'm just taking one quick round in the other chat box too, just to make sure we've kind of covered everything. I think, we've almost covered all the questions that's been coming up again. So this video webinar is recorded and we will be sharing this. So please feel free to go back. We've kind of touched upon everything, whatever is being asked here. So please feel free. It'll be uploaded on all our social channels. So yes, you'll have your answers there. So it was a pleasure talking to you both as always. And next time we will definitely talk more about free zones, right?
Sure.
Okay, so until then, thank you so much for watching. And
thank you so much, everyone, for joining us.
Thank you for joining us.
Thank you. Until next time.